Good evening, TheoTrade. This is Corey Rosenblum bringing you your TheoTrade nightly video for July 10th, 2018. We're talking a sell swing pathway, targets achieved, divergences aplenty, and the next pathway for the probable future being one of a sell swing down away from our resistance targets. We'll start with 2,800 in the S&P futures. That's back to the June high, where we had another turnabout and sell swing down away from this pivot. The Dow mini futures over here are at 25,000. We'll see shortly that the Nasdaq futures, they're a little bit shy of their June high, but they're pinned right now at about 7,300. And our Russell had a roughly, the weakest market today, had a sell swing down away from 1710 and its prior high, but it's frozen at 1,700. So however you frame out the next series of days, TheoTrade, I would suggest playing the departure from 2,800, 25,000, 7,300, and 1,700, be it with option trades, swing trades, or intraday trades on a price pathway movement away from this level. That's the neutral approach. Trade a movement away from it, adding some direction. Let's look at volume. This can help us a little bit because we'll start out with the S&P futures on the daily chart. What do you see here? If we take a look at the bulk of 2018, we'll emphasize volume, and we see that in general, volume across the board has been lower. What struck my attention is that this volume bar here, that's today's session, was almost the same as our half-day holiday session on July 3rd. That's not giving me a sign of bullish confidence, bullish enthusiasm. If they were expecting higher prices and bulls were on the rampage, you would be seeing higher volume, and we're not. We're actually seeing volume go down each of the last 3 trend day or bullish sessions into our target. The same is true in the Nasdaq. This is our Nasdaq futures trading again into its 7,300 level. Volume has consistently gone down, although we got a little bit of an uptick today. But it too, it was actually yesterday, Monday session, was roughly lower than our half-day session. So this certainly has me perplexed. Not just volume, but also market internals. This is our advanced decline line for the S&P 500. So it's ADSPD, a $ ADSPD for the advanced decline of the S&P 500. Market internals strengthened, that was the jobs report, strengthened and pinned themselves at about 400, plus 400. That's bullish. That's a sign of continuity. Confirmation, when price and the internals strengthen, suggest continuity. And we got that on Monday with an additional upside rally, but look at internals. The breadth line, still positive at 250, positive 250 most of the session, was lower than 400, but the equity index was higher. And today we have the same outcome, except there's one additional variable. We're into the 2,800 target, and that's been a spot we've been playing for. It's a spot that bulls will potentially, in aggregate, take off their positions with a profit and be happy. It's a spot where bears might be looking to put on some risk, might be looking to trade short. That's going to be our dominant thesis. That's going to be our expected play in terms of trading the departure from, in this case, 2,800. However, the alternate thesis is if this market breaks above it, we'll take the internals off, and we have a potential pathway through open air to 2,900. There's just not a lot there. And I'll zoom this down and look at the price chart from 2018. So we're into a mega spot, 2,800. It was the top in reversal in February. It was a top and swing reversal in March, and it was a top and swing reversal in June. We also saw a similar metric of reduced volume into the high. That was ultimately the case in all of these prior examples. So volume divergences, especially this week, into a target, yes, that does tip the odds strongly in the favor of the bears or short sellers. Therefore, we'll plan our trades and trade departures away from this level, be it on a 5-minute, 2-minute, 1-minute chart. If we see additional downside continuity, we might see it last a couple more sessions, maybe more, to 27.45. That would be a logical downswing, maybe 27.50. Again, not getting ahead of ourselves, but we're going to be cautious, if not outright bearish, into this resistance spot. The Nasdaq, same logic. It also has 7,300, but it is showing relative strength. Not so much with volume, but with the price. The S&P is beneath its prior high over here. The Nasdaq is not. It is actually just shy of its all-time high, but nonetheless is showing our divergences. So we're going to be cautious. If you don't want to trade the general indices in futures or ETFs, we certainly have plays in individual stocks. A brief overview takes us into Microsoft. Same little divergence, same little weakness in volume, but reversal candles, also shy of its 103 prior high. That puts us into a bear or cautious mode, into resistance. Facebook pushed up with its own little doji on Monday that pushed even lower, away from 205 in today's session. And Amazon, not quite at the prior high, but again, neither is the Nasdaq. 1750 is its spot to watch. Apple, a potential little resistance play. I'd watch 190 per share if this can break above. But don't forget, we're not going to predict, we're going to plan. The alternate thesis in this case for Apple says if the buyers can trick the sellers and shift away these probabilities, so prepare for that. Don't get caught up in a surprise bullish breakout that defies the odds. That's true for all these stocks. Netflix, just shy of its 419, 420 per share. Again, just a little bit beneath it on a resistance play. And for Google, it's also shy, but look at its level, 1180. And we're seeing candles in all of these names. Otherwise, just a quick little look at Boeing, our little favorite Dow component. 350 is its spot resistance marker from the past in 2018. And Caterpillar. Caterpillar is a little weaker, but it also is playing up into a resistance target. It's about 142, almost 143 per share. So we're going to plan this out in terms of probabilities. We've seen this happen before. A push into 2800 and a rapid sell swing. A push into 2800 and a rapid sell swing. A push into 2800 and a rapid sell swing. We're going to plan this out, TheoTrade. We aren't necessarily going to predict it, but the odds do favor history repeating because it's done so each time it's achieved here. But to be a good trader, we do not forecast. We plan and prepare our trades. The alternate thesis, what's the scenario that would surprise us all, is a bullish breakout beyond these levels, defying the wisdom of the crowd, defying the probability, defying the internals and everything else. But we always say if something should happen but doesn't, it often leads to a larger than expected move in the opposite direction. That would be a short squeeze, really a deer in the headlight short squeeze, trap the upside. Be careful, be safe. Odds do favor a bear play, consolidation, and a movement away from these pivots. But if something goes wrong, 2850, 2900, that could be the future. Don't expect it, but we will prepare for either outcome. Be safe, TheoTrade. Take care. Have a great evening. This is Corey Rosenblum with the TheoTrade Nightly Video for July 10th, 2018.